XRP swing structure today. 1.118 is the level that matters. Hold above it, and buyers may still have enough strength to defend the February dominant range. Lose it, and XRP opens the door toward the next Fibonacci support zone lower down. One level, two outcomes. Let's walk the setup. When you understand swing structure, you don't need to look for fancy indicators in traders claiming they know how to read smart money, which is ironic because they are never in a fund and would have no idea what smart money is until after the event. Today we will carry out an XRP technical analysis. What we are looking at is a weekly swing chart that's one of the main tools you need to determine which direction price is going, and what we see immediately is lower highs and lower lows. That quickly tells us the market structure and trend. But here is something many traders miss. We've completely ignored a whole range of bars because the beauty of swing trading is that it cuts out the noise. In this case, the swing was already down, and those bars did nothing to change the structure. Think of it like an inside bar. This is why understanding structure matters more than constantly chasing indicators. It is when you start layering tools from your toolbox that the story starts unfolding, and in this XRP technical analysis, we are going to examine the critical details you need to know behind XRP's price action without the hype. The first thing to notice is position. The dotted line represents the yearly 2026 midpoint. Below it, and price action is weak. XRP is currently trading below that level. Now, remember, we already confirmed on the higher time frame that the trend is down, and now we start seeing the weekly swing highs progressively getting lower. 1.670 on 15th February 2026, 1.607 on 17th March 2026, 1.549 on 14th May 2026. Each rally is becoming weaker. And notice something else. The 2026 anchored VWAP continues capping every rally attempt. At least for now, buyers cannot break through it. If you enjoy this style of Fibonacci and swing trading analysis, subscribe to our channel, and we also produce a newsletter, link in description. The next important factor is the February range, which has dominated XRP price action for almost 5 months. The February high was 1.678 on 1st February 2026, and the February low was 1.118 on 6th February 2026. We call this the dominant range because one large range structure has controlled almost all subsequent price action. And when you have a dominant range, the midpoint becomes extremely important. That midpoint sits at 1.398. Below it, the market shows weakness. Above it, buyers start regaining control. Now, here is where things become interesting. A closer look at the current XRP price action tells us price is now challenging the dominant range itself. The wick has already pierced below it, but so far the candle bodies are still managing to hold inside the range. The next few bars are going to matter a lot, because if sellers start forcing candle bodies below the February low, the structure starts changing significantly. When we layer on the Ichimoku tool, we also received a TK cross sell alert, confirming momentum is still leaning bearish. Now we add our Fibonacci levels. We have Fibonacci resistance sitting overhead between 1.553 and 1.563, which also aligns with the weekly swing highs and the anchored VWAP acting as overhead pressure. Right now, the price is far away from there. On the downside, we still have Fibonacci support zone lower down between 1.050 and 1.070, which has not yet been tested. This is a strong support zone, so breaking this could lead to much stronger downside. So, reading the market structure has kept us on the right side of the market. If nothing else, it has prevented us from buying into weakness. Right now, the line of least resistance still points lower. The levels to watch on the upside are the Fibonacci resistance zone between 1.553 and 1.563, together with the breaking of the weekly swing highs from 14th May, 17th March, and 15th February. However, holding the Fibonacci support zone level presents a great buying opportunity when a confirmed buy signal appears. We still expect the dominant range low to break and that Fibonacci support zone to hold and a reversal to take place. If that zone comes into play, we will discuss in the next video whether buyers have enough strength left to defend it. If you found this analysis useful, subscribe to Crypto Trading Mastery and hit the notification bell so you don't miss our next daily video. Thanks for watching.